It's Alex Powell here with another quick lesson video. I don't know if we're live. I think we're live right now. Okay, sorry about that, folks. Some technical difficulties. Today, we are talking about exit strategies, okay? So in real estate, if you guys have ever bought investment type properties, then I'm sure you guys have read somewhere that what is your exit strategy when buying a home? And I think that, or buying an investment, sorry. I think that it can be kind of obvious when you think about it, but do you really think about starting with the end in mind? And a lot of people don't, right? So that's why I want to run through quick 5 points on exit strategies and what you can do to protect yourself and buying with the end in mind. Very, very important. So we're going to go through 5 quick points here. So what do we mean by exit strategy? 2, give yourself options at the buy. Be real, or 3, be realistic and know your market. 4, we're going to run through a quick example of a situation in our lives. And then 5, proactive, not reactive. Very, very key point. So starting with number 1, what do we mean by exit strategy? So when we buy a property, we always have to think about what are we going to be doing with that property? Are we going to be holding it? Are we going to be selling it? Are we going to be refinancing it? There's a ton of different options. You can flip it to a partner. You can take a loan on it versus like have from a private flipping it into an A loan, so you can save on interest rates. There's a ton of options that you can do in real estate, and that's why part of the reason I love it, how creative you can be. But you really have to think about what that strategy is before you go into it. Okay, so that's in a general nutshell what we mean by exit strategy. And when people sometimes aren't clear about their exit strategy and they're just looking for an opportunity, however good it might be, different exit strategies will result in different outcomes. So depending on how much money you can make or how good the deal is or what the final return looks like. For instance, in this market, flipping properties could be a little bit of a risk. If you bought in, when the properties were higher, you didn't have as much margin as you thought, and now there's a lot of speculation over property values dropping. So that's gonna, that could mean that maybe you might have to go with a different strategy, or a different exit strategy, right? So now on that, we are seeing that property values are staying pretty good right now. So definitely reach out to us and let us know if you want to get some more information or insight on that. But we do expect to see the sales volumes, and they've already started to happen comparative to last year's spring. They're significantly less. But once again, with less sales volume, and that's a lot of the projections that you're hearing on the news is sales volume. It's really juicy data. That doesn't really mean sales volumes will decrease by 30%. Okay, what about prices? Do we think prices are going to decrease by 30%? I don't think so. So anyway, that's my thought on the whole part. But point number 2, give yourself options at the buy. So just like when you're purchasing a property, you make your money at the buy. So when you buy a property, you have to make sure that you're making your money when you put that purchase in. You don't make your money by shaving construction costs and trying to get cheaper money on the property. No, you make your money when you buy the deal. No different. Give yourself options when you buy the deal. So if I'm buying a property, you're damn right, I'm thinking of options A, B, and C of what I can do with this in case A doesn't work, or what if B doesn't work? Or is there a way that I can combine different exit strategies or different ideas to get the best result possible? And this is particularly important in a shifting market. So for example, I'll save that. I'll get to the example. The third is be realistic and know your market, right? So for example, a lot of people who have bought a flip right now and have very tight margins, and they might say, you know what, no, I'm just gonna carry forward and the market's gonna be okay. Just be careful. And are we hopeful that everything's gonna turn out? Yeah. However, we also need to recognize the signs and recognize what professionals are saying in terms of where the market's going, is things are slowing down a little bit. Be weary. Understand that the real estate market, just like the stock market, is cyclical. Here in the Hamilton area, we've been incredibly blessed by having some really strong appreciation over the years. However, it's not to say that can't slow down. Okay, we are grateful that we have a very robust banking system. So once again, property values, I'm pretty confident will stay fairly fairly at par. But take these things into consideration, because you may not have you may not be able to get what you were hoping to get out of the property, and then all of a sudden you're trying to catch a falling knife, and we call it chasing the market, where you're not getting the price you were hoping for, so you're gonna have to lower the price, and then lower the price again, and lower the price again. So an example in our world is that we always aim to make our money at the buy. That's a rule that we stand by within our team, is that we know that if we can buy this property at a steep enough discount, or the property based on what we're planning to do with it can be done incredibly efficiently, then we already can set the stage that we have multiple options. But for example, we have a property that's going to be closing on the Hamilton Mountain coming up at the end of April. And now originally the idea was just to do a fairly easy cosmetic flip on the property, put it back on the market, and then sell it for the best price possible, right? And we were supposed to make a decent margin on that. And we likely could still do that without any sort of hiccups, and we have enough meat on the bone that it would be okay. So we're not worried by any means. However, a better exit strategy might be to turn this into temporary accommodations. So maybe we keep it as an Airbnb for 3, 4, 5 months. Maybe we wait until next spring, where hopefully the market is back and stabilized, and things are the gears are spinning again within the economy. And maybe at that point, it's a better alternative to sell then. In the meantime, we can just let the property coast, as long as we're covering the expenses and we know that we've done the renovations and that we've done well. So there's an example of how we can switch gears and change our exit strategy. Another scenario is where a lot of people are doing BRRRRs right now. And when we're doing BRRRRs, we're hoping for a very high refinance price at the back end. And once we get that high refinance price, that's when we're going and scooping out the equity and putting that back in ours and our lenders' pockets. And what we're going to start to see is that some refinances might not be coming up as high. Appraisers are a little bit more conservative now. Banks, of course, are much more conservative now. So now you got to ask yourself, okay, well, what if we don't get all that money back out on our refinances? Is there another strategy? Maybe if that lender needs the money, you guys decide to put on the market, and instead of making that 100 grand equity, you're now walking away with $30,000, and it's better than a poke in the eye with a sharp stick. However, understanding exit strategies and being realistic is incredibly important. Which brings us to our last step: is be proactive, not reactive. Okay, we are professionals in this business. We need to act accordingly. This isn't just like, oh, I love making deals, and we've seen a great growth in the Hamilton market. We have to understand the economics that goes behind it. We have to understand what is causing the cycle. We have to keep on sale values that are happening right now. Understand your market. Ask questions. If you're not sure about what you should do, reach out to ourselves. There's a ton of resources out there for you guys to lean on. And hopefully everyone comes out on top, and we can move on. But I hope you guys got something out of this. Definitely a very, very important point. It's an interesting thing to think about, as especially people that maybe haven't bought a property before. So, well, how am I going to think about the end in mind when I haven't even thought about the beginning or what this process looks like? But it's incredibly important to think backwards and understand where you're going, and then how you can get yourself there, okay? So happy Canadian real estate investing, everybody. Stay safe out there. I hope everyone's well and healthy, and we will talk to you on our next video.